After another very positive month for Bitcoin, you may be wondering what comes next for BTC. So let's analyze the data to see what we can expect next for Bitcoin. Today, we're going to be doing a roundup to discuss Bitcoin's current conditions, and where better to start than the monthly returns heat map chart we have here on BitcoinMagazinePro.com. And as we can see, the month of October, I know this is a few days before the end of the month, but so far has been incredibly positive for BTC with double-digit percentage gains. And as I film this, Bitcoin has actually broken above $70,000 to about $71,500 actually as I film this. So it's the first time we've surpassed that big 70K resistance level in multiple months. I think June was the last time we were this high in the Bitcoin price. So this is obviously incredibly positive. But if we just scroll down here, we can also see we're not really getting ahead of ourselves, which is a very healthy indication that hopefully this rally can be sustained even higher. Just looking at something like the Fear and Greed Index here, you'd expect only a couple percent away from our all-time high to be at incredibly greedy levels, especially after positive months of price action for the first time since March, I believe. But still, so far, we're only in the slightly greedy area, which gives us a lot of confidence, like I said, that this move can be sustained, especially considering we're massively outpacing pretty much every other benchmark. And if we just scroll down here, Bitcoin so far has been 99.7% of profitable for the total amount of time Bitcoin has been around. So there's only 0.3% of Bitcoin's price action days that were higher than today's current price action. And if we just scroll down here, we can see that compared to pretty much every other cryptocurrency, Bitcoin has been massively outperforming as well, which again gives us a little bit more confidence that maybe this choppy consolidation where it's just speculation from pre-existing market participants may be behind us. Hopefully now some larger capital inflows can come in and really move the market considerably higher rather than just people rotating and gambling on the next best shitcoin, let's be honest. So if we just go to the TradingView chart here, what we can see is, like I said, Bitcoin has broken higher, and especially positive is that we've broken out of this downtrend. If I just draw this on here, that has been holding Bitcoin back for multiple months, pretty much all of 2024 now. And we could see that Bitcoin's price was making lower highs, lower lows, lower highs, and lower lows. So recently, the fact that we've reversed this trend and are making higher highs and higher lows and have now broken out from above this resistance is incredibly positive and shows the strength of BTC. There is still, of course, some significant resistance above us. If I just draw this on around there, where we saw these two peaks previously in May earlier this year, I think that's going to be a pretty key level to watch, especially considering that this level has been tested as resistance multiple times. And then above that as well, of course, is the all-time high, which currently sits at just beneath $74,000. So I'd imagine Bitcoin in this area could have some considerable sell side resistance, but hopefully we can build at least a solid foundation potentially with another higher low if Bitcoin is to retrace slightly, potentially to around this 69, maybe even around that $68,000 level to retest this downwards resistance. And if we were to move significantly lower than that, this 200 daily moving average is now starting to turn up. So hopefully over the coming days and weeks, we see this continue to rapidly increase and provide some really solid foundational support for BTC, which also aligns pretty nicely if I just go here with the short-term holder realized price. Now, during bull cycles, we see this average accumulation or cost basis for new market participants acting as support. Through 2016 and 2017, we saw every time Bitcoin retraced this level, we had a very strong positive rebound in price action. And same to some extent through 2020 and 2021, although with the COVID dump, we did spend a little bit of time beneath this. But in the most recent cycle here, we can see that we have had multiple bounces from this line as the Bitcoin price did move higher, but we have over the past few months spent considerable amount of time beneath this line as it acted as resistance. So the fact that we've now once again broken above this line really gives us some reassurance that this move can be sustained as new market participants are flowing back into the market, because we're seeing this short-term holder realized price begin to increase again. So hopefully if we add to see a bit of a retracement again, we're seeing some confluence in this short-term holder realized price and that 200-day to give some really strong support at about that $63,000, $64,000 level. And it's not just the technicals that are looking very healthy. Here I'm looking at the Bitcoin funding rates, specifically the coin-denominated funding rates on the 24-hour chart. And what we can see is we're not getting ahead of ourselves in the futures markets either. Usually when we see a big breakout like this, we see an overwhelming amount of long trades coming in and investors and traders paying a huge amount of funding rates just to keep their positions open, which really is a bit of a counter trading signal. So the fact that we're still in this kind of very healthy very sustainable funding rates region, gives us a lot more confidence that this move can be sustained and continue higher. We could see in these regions here when Bitcoin got a little bit ahead of ourselves when we reached new all-time highs, and especially post ETF announcement, these funding rates became incredibly positive, indicating an overwhelming majority of long positions. And like we said, this is a bit more of a counter trading indicator. So if we do see some very negative funding rates, it's a good time to long. Very positive funding rates, potentially a good time to start taking some profits. So that's another positive indication that we can see. And it's not just retail and futures traders, but institutional interest is absolutely skyrocketing as well. Here we can see the ETF daily inflows in USD denominated terms. And what we can see is over the past 3 or so weeks, we've seen billions of dollars flow into BTC ETFs. Even yesterday alone, we had practically $500 million flowing into the Bitcoin ETFs. Now, these are spot ETFs, so they are actually purchasing real BTC and storing them. So this is definitely having a positive influence on the Bitcoin price action. And as long as we see a sustained growth in this ETF inflows, then there's no reason why this trend can't continue, especially considering if we look at the cumulative flows of US dollar into the BTC ETFs. We've seen over the past few weeks, this GBTC outflows has been flat, it's leveled off. So the GBTC was pretty much the ETF before the ETFs were approved, and there was quite a big disparity between the actual price of BTC and GBTC itself. So a lot of people, once the ETFs were launched, were selling their GBTC to buy actual Bitcoin ETFs through IBIT or any of the other large players. So the fact that we've now seen these outflows pause indicates that there's not so much sell-side pressure coming from these GBTC outflows. So pretty much every new dollar we're seeing is new capital coming into the ETF markets. It's not just repurposed old GBTC. So the fact that this has climbed far above $45 billion now indicates that there is a huge amount of institutional interest. And like we can see from the daily inflows and just this chart here, it is continuing to grow. And it's not just the institutional, macroeconomic, technical derivatives markets that are looking very positive for BTC. We can also look at some on-chain data to see that things are looking very positive indeed. Here we're looking at the Puel multiple, which is looking at the daily miner earnings in USD denomination compared to a 365-day historical average. So once this is above 1, we can see that miners are earning more than they used to. When it's below 1, it indicates that miners are earning less than they used to. So we've actually seen this beneath 1 for multiple months now, especially post Bitcoin halving, once we saw the inflow of new BTC every block reduced by 50% from 6.25 to 3.125 BTC. So this obviously had a huge impact on miner earnings, considering these block rewards make up a huge portion of their revenue. But we've now actually recently seen this surpass 1 again, indicating that they have pretty much reached an equilibrium of their historical yearly average, which is a very positive indication that miners are starting to earn some money again. And hopefully we'll begin once again pouring some capital into new mining equipment as we see a pretty strong correlation between the Bitcoin hash rate and the Bitcoin price action. One thing that is interesting to see is I think the current data we're seeing in this Puel multiple is very similar to some periods we've seen in the past, specifically in 2016. If I just remove this here, we can see the price action that we've had where we've seen Bitcoin ranging beneath the value of 1 post halving. Looks very similar to what we saw in 2016 here, where we saw a huge dump from pretty much the same level, if I can draw a straight line about there. And then after that, we had a pretty similar amount of time consolidating beneath this level of 1 as well, before we broke above that and rallied exponentially higher. So now the fact that we've broken above 1 once again, maybe we'll be able to replicate what we saw in 2016 and begin our latter stages of the bull cycle where we see some more exponential price action. So at that point in time, Bitcoin's price was around $700 to $800 in Q4 2016, and it went on pretty much a non-stop year-long bull rally to near $20,000. So pretty much a 25x. So I certainly wouldn't complain if we saw something similar in this cycle. And if we just look at the MVRV Z Score, again, it's showing a pretty similar pattern and some comparable data to what we saw then. It's not as clear on this chart, but again, we can see some correlation between the price action, the data action that we saw in 2016, Q4 2016 post-halving, and what we're seeing now, where we saw this little bit of a retracement after Bitcoin had this initial run-up to around the 2 level. We retraced beneath that, and then we spend a considerable amount of time, about 6+ months, beneath this level before we break higher. And Bitcoin now has done a fairly similar thing in this cycle. So hopefully what we can do is see Bitcoin rally again to the MVRV Z scores of 3 or 4, or if not considerably higher, to really again kick off the latter stages of the bull cycle. So this MVRV Z score is looking at the relationship between the market cap of Bitcoin and the realized price, or the average cost basis, of all Bitcoin market participants. And one thing we can also do with a metric such as this one is look at the MVRV Z score today, which is at a value of 2. And if we just go to the standard realized price chart here, which is at around $33,000, we can see that price is, well, about double that. If we take the raw MVRV scores, which is at about a 2.12, then that's how we get the exact figure. But what we can say is if we were to reach values which we did at our current all-time high at about $74,000 when this score was at a value of around 3, then we just have to simply triple the average accumulation price of BTC. So if this is around $33,000, then an MVRV score of 3 would indicate a Bitcoin price of about $100,000, assuming this average accumulation price doesn't continue to increase. A value of 4, 133, value of 6 would be $200,000 approximately. So there is a huge amount of upside room still to go in this cycle. And this also negates the fact that, like I said, this realized price typically increases very rapidly in the latter stages of a bull cycle. So values of 3, 4, 5, 6 even on this MVRV ratio, we're probably going to be considerably higher than the values we can predict today. So ultimately, pretty much everything is looking very positive for BTC. Obviously, anytime we have a massive rise in price, like we've seen over the past few weeks, it may be time for a little bit of a cool-off period, especially as we're reaching that $72,000 to $74,000 resistance region. But there's a huge amount of support beneath us. And as we can see from not just on-chain and fundamental and technical and derivative and macroeconomic data, pretty much everything is looking incredibly bullish for BTC. And there's no reason that this fun cannot continue for the coming weeks and months. Also, if you haven't already, please don't forget to like this video, subscribe to the channel and turn on notifications to ensure you're receiving all of our content as soon as it's released. And make sure to check out all the resources we discussed today, as well as the many more that are all available on BitcoinMagazinePro.com, your number one source for Bitcoin analysis. So just to summarize, Bitcoin has now broken above the $70,000 resistance level for the first time in months. And we're now closing in on consecutive positive months of Bitcoin price action for the first time since March, when Bitcoin actually set its all-time high at $74,000. And while there is still some resistance above us at that $72,000 to $74,000 region, the technicals still look good. The derivative markets are at healthy levels, like we could see with the institutional interest incredibly high and continuing to grow as well. Everything looks incredibly positive and very bullish for BTC going forward. I know there are some fundamental news events coming up in the next week or so, which I'm sure are going to bring a little bit of volatility. But zooming out, not just focusing on intraday price action and the next week or so, for the next few months, every indication is looking incredibly bullish for BTC, especially if we look at something like the on-chain charts we looked at in the Puer multiple and the MVRV Z score, which do show some very comparable data to Q4 2016, which is when Bitcoin went on about a year-long rally up to about $19,800 from about $700 or $800, so a 25x. So I'm definitely not implying that the same multiples will be seen this cycle, because we are seeing a little bit of diminishing returns, but just looking at the general trend of positive price action over the time period in which we are in the cycle, things are looking very good for the rest of 2024 and 2025. If you liked this video, then please visit BitcoinMagazinePro.com, where our analytics help you to cut through the noise to make informed, data-driven decisions about Bitcoin. With over 150 live chats, personalized indicator alerts, in-depth crypto industry reports, API access, and more, all for a fraction of the standard industry price. And let me know what your thoughts are on the current Bitcoin price action. Do you think this upwards move can be sustained, or do you think maybe we're going to hit some resistance and have a little bit of a cool-off period, especially with some pretty major news events happening in the coming weeks? As I said, let me know in the comments below and on social media. I look forward to reading and replying to them. Thank you all very much for watching, and I'll see you in the next one.